I'm glad to be on the CNBC platform. Thanks for this question. I think the way our business is structured and post Kraft Heinz acquisition, one of the things that has happened is because of the strong summer seasonality of a couple of our brands, Glucon-D and ISIL, we typically see January to June, which is quarter four, quarter one, accounts for almost 65% of our revenue and almost 85% of our EBITDA, which is largely the impact of the operating leverage because the revenue moves up and your fixed costs are spread. That's the reason you find typically we're operating 20-22% kind of EBITDA margins in quarter four, quarter one, while the quarter two and three drops substantially to 3%.
Which,
We're quite conscious of this reason, and we're doing several launches. We're also trying to, increase the use cases for a brand like Glucon-D in the second summer, like September, October. There are other launches, like we launched Body Wash and Every Youth, which is a more winter brand. So a lot of work is happening, but business structures take, and more so in a consumer, habit space, take a much longer to do. So we live with this, and hopefully with a widening portfolio, including acquisitions, this will change over a period of time, but not in a next 1 or 2 years or 3 years. It'll have a bit of journey. Coming to your second part of the question, I think what we saw was between FY21 to FY23 and right up to FY24, because of the gross margins dropped, huge global commodity impacts, inflation, our margins had come under pressure. We are quite committed to building it back to 17-18% EBITDA margins. And if we really look at it, last 6 to 7 quarters, one of the first things that we've been able to work on and demonstrate is improvement in our gross margins. So typically, if you look at it, most of the quarters, except for last quarter, which was flattish, but every quarter, comparable to a previous year, we've been able to show 200 to 300 basis points improvement in gross margin. So that's one critical lever for us through a mix of pricing, cost management at product level. We are looking at improving our gross margins, which will play out in terms of how we improve our EBITDA. Second is there are very structured cost management programs through the other overheads as well, where we believe with as we scale up, our growth rates have been doing rather well versus the rest of the FMCG. So the operating leverage will start playing out. So a strong mix of pricing actions, cost management, and operating leverage. I think we are good to get to a 17-18% over the next 2 to 3 years from an EBITDA point of view. The some of that has been demonstrated over last 4 or 5 quarters, and more you shall see in the coming quarters.
Right. Tarun, good afternoon. Thank you for joining in. I'd like to get on to sports beverages. What about competition in that space? Because there are other pharma companies, etc. You're getting there. What are you penciling in for brands like Glucon-D? Is there any further plans to scale it up further? What are the growth plans for this category in particular?
So interestingly, Glucon-D really started for covered a wide breadth of use cases, including recovery from illness, sports, a lot of rehydration and energy. It covers a lot of things. As the market has got segmented, and there is sports, there is ORS, there is hypertonics, and a lot of other RTD spaces which have come up. So as we keep building Glucon-D in just the basic space where it means a lot for consumers from both hydration as well as providing energy. We are also looking at moving up the value chain in terms of getting into RTDs, where we have a Tetra Pak hypertonic, which is energy with electrolytes. We piloted last year with Glucon-D Activors in limited geographies. As we speak, we are scaling it up, and we believe we'll take it to more states. And clearly, that's going to be one unique offering that we'll have. A brand like Glucon-D, which is amongst the top most respected brands and trusted brands, with a strong differentiated formulation of energy with electrolytes will work. We're also rolling out ORS with some doctor detailing. So we are well placed. We are also looking at some more innovations in the years to come to take a larger share of throat, if I were to say so. The category is growing, and we have space for us as we grow.
Larger share of throat and larger share of thirst as well, if one must. Just a final question before we let you go, running out of time out here. I look at your portfolio. There is Complan, and then there is Rite Bite. There is Glucon-D, and then there is Sugar Free. There are so many inter-brand synergies. I'm wondering if you are thinking of any sort of collaborations here, a Complan with maybe max protein infused, or a Glucon-D sugar-free version of Glucon-D. Is that on your mind? And what's your prognosis for Rite Bite over the next couple of years? What's the scale that you're looking to achieve out here?
Sure. So it's a very interesting question. We are looking at synergies and learning from each other, each of these brands, and pulling them together. It need not translate into specific brand-led actions where you show a Complan Max Protein. But the fact is, if you really look at it, our nutrition portfolio with Complan and Max Protein. In Complan, we've been saying highest protein within the category, and we have launched VMAX with a fairly high level of protein, 30% protein, and which is adult nutrition and going through a doctor and expert selling route, while Max Protein is for the younger audience with a new format. So there is a continuum which exists, both from a formulation point of view, consumers' expectation, need states point of view, and how we service. Now with the emerging channels, whether it's quick commerce or even going into chemists. So there is a lot of synergies through the value chain that we see across our brands. And therefore, we are working on this. Glucon-D, again, we're looking at sports nutrition where Complan and Glucon-D could have different roles in different ways from protein point of view, hydration, electrolytes point of view. So we are looking at and evaluating some of them and looking at innovations that can really fire up some of these opportunities. Jumping on to your question on the prognosis and our view on our Max Protein purchase, I think this brand is very powerful. It has amazing consumer acceptance. If we look at last 3 to 5 years, the brand has grown upwards of 25% on a CAGR basis. We believe with us, we can continue to build on a higher base with this kind of growth levels.
Right.
Increase our distribution because we have the benefit of much deeper distribution, as well as some innovations which we are experimenting as we speak and over the next 3 to 6 months. So we are imagining that this could be clearly one of our larger brands, could get to a 500 crore sooner than later. So we are quite excited about the possibilities that this brand and space provides and meets what consumer is seeking. They want healthy snacking where they love the taste, and it has proteins and many other things and fiber which really fit into our consumers' expectations. So we are quite positive about it. Yes.